Hello, in this lecture we're going to work a fairly comprehensive problem using the process cost system. Process cost being something that we're going to use for production. So whenever we're using job costs or process costs, we are producing something. The difference between job cost and process cost being that job cost usually has a differentiation of things we produce. Process cost being very similar types of things. So it's things like processing oil or something like that. So we then have to allocate to the process rather than individual jobs. So that's what we're going to have here. We're going to have the data on the left-hand side. We're going to enter that into the blue areas. And then we're going to have our trial balance, which will populate automatically. We will post the journal entries here to the general ledger on this side. Once we post to the general ledger, it will automatically populate our trial balance here. This will obviously be making more sense as we go. We can see the trial balance formatted in terms of assets in green, liabilities in orange or yellow, and equity in the lighter blue, and in the income statement, sales and expenses in the darker blue. We have net income, just the bottom half here. We just got the gain or loss at this time, and we can see that the debits equal the credits because the debits minus the credits equal 0. We're going to put it in this format over here, having debits with positive numbers, credits with negative numbers. That allows us to save some room in posting this information here. We of course will break out the debits and credits in terms of a debit column and a credit column on this side, as well as represent the credits with negatives, and that's how we know we're in balance on the trial balance, meaning that the debits minus the credits equals 0. We could see that on the general ledger too, so if we added up all the GL accounts in this way, we can use formulas to see that the debits equal the credits on the balance of all of these accounts, which is of course what is making up the trial balance. Alright, so let's work through this problem. We're going to start off, they're going to give us the inventory at the end. So we're going to need that later. We don't need that quite yet. We can see that we're going to be focusing in, of course, on the inventory accounts to do process costing as we produce our inventory. So those accounts include, the main ones we'd be focusing on are raw materials inventory, work in process inventory, finished goods inventory, and overhead. I'm putting in the inventory section here. And then once we sell it, that inventory will finally go to the cost of goods sold when we sell the inventory, and that's the expense related to us using the inventory in order to generate revenue by giving it to a customer. So what we have here, then we have the raw materials purchased on credit. So that's the first thing that we are going to take a look at. If we purchase something on credit, the idea then I would always ask, is cash affected? In this case, no, we purchased it on credit. So instead of paying cash, we paid with a payable. So it's going to go into accounts payable. Now it might be easier to think about what we're getting. We're going to get raw materials. Raw materials is up here. It's an asset, has a debit balance. We're going to make it go up, so we're going to do the same thing to it, which in this case is another debit. So I'm going to copy the raw materials. I'm going to put that on top in the debit area. The amount being 300,000. We're going to credit something 300,000, so I'm going to put a negative of that number. There's that number, or you could just put a negative 300,000 for this worksheet's purposes. We're going to put all credits as negative numbers to help us with some formulas for Excel. Alright, so we have the negative 300,000, and that's going to go into the payable. It's not going to be cash going down. It's not the good thing going down. It's the bad thing going up. Payables going up. It has a credit balance. We're going to make it go up again with doing the same thing to it, which is another credit, by copying that account, putting it over here. I'm going to paste it, right click, paste it 1, 2, 3. Again, I don't want to write over the formulas. You could, but I'd rather paste it 1, 2, 3, keep the blue cell. Now we're going to post this to the general ledger. This is called posting to the general ledger, as we've done many times in the past. So the general ledger will be in order, the same as the trial balance. So we've got the assets, then the liabilities, then the equity, and then the income statement. So we're looking for raw materials. It's the third account on the trial balance. Therefore, it'll be the third account on the general ledger. So here's the GL, cash, accounts receivable, raw materials. I'm going to put my cursor in O23. This is O23, and just say equals. And then I could use the arrows and just go over here until we go up to what we want to post, which is this item here, and enter. So there is that item. The next one is accounts payable. That's going to be the first orange account down here. So it's in the same order on this side. So the first orange account is right there. So it's going to be a credit. So I'm all the way over here in cell X22. X22 right there. I'm going to say equals, and then scroll over till you can see it, and then go into the 300,000 credit and enter. Now, if you want to see them at the same time, we could also, of course, change the screen and make the screen a bit smaller like this so we can see the 300 there. And what that does to our balance is, of course, put us back in balance by having the debits equal the credits here, as well as the debits equal the credits here. And we can see that our raw materials inventory is 368 in our running balance, and 368 has then populated here, this number coming from there. So that's going to be the first journal entry we have. Next one, we have the factory depreciation, and I did switch this up a bit. I moved this one down here and put the factory depreciation next, so that's the next one we will take a look at. So we have depreciation on the factory. Anytime something says we are going to be working in the factory, that's an indication that it's going to be part of inventory. If it was depreciation on the office building where we do the administrative work, that wouldn't be going to the asset of inventory. If it's on the factory where we make inventory, then it's going to go into the inventory. So that means that instead of debiting like we have learned in the past, the depreciation expense, which we've probably just memorized that journal entry, we need to now unmemorize it, because really the reason it's going to go into the expense is because we used it in order to generate revenue, which is the matching principle in that time period. But this time we're using it to generate revenue later. It hasn't helped us generate revenue yet. It's helping us generate the asset, that asset being inventory. Later we will expense it in the form of cost of goods sold. So we're going to put it into the asset in this case, and we don't know where to put it yet. We don't know what process really to put it into. So we're going to dump it into our bucket, the bucket assets for inventory being factory overhead. So I'm going to copy factory overhead. We're going to put that on top, paste it 1, 2, 3 right there. That's going to be the 50,000. So then we're going to credit something for that same 50,000. I'm going to do it by saying negative of this number. And the credit's going to be exactly what we thought it would be. So that's the normal half of it. So it's, instead of debiting depreciation expense, we debit factory overhead and we credit accumulated depreciation. So accumulated depreciation is going to be the allocation of the cost. So it costs 250,000 less the accumulated depreciation. 200,000 is the book value at this time. We're going to credit this accumulated depreciation. So I'm going to copy that. Going to put that in cell B13. That's going to be the bottom amount there. And now we can post this out. So we're going to post this out. So I'm going to scroll over here. Now we can see that the factory overhead is like the 1, 2, 3, 4, 5, 6th account down here. It's going to be the same when we go to the general ledger over here. So we got the factory overhead is way down here. We are on the debit side, so I'm in cell S27. So S27, and I can just barely see my journal entry up here. So S27 equals this cell in C12, and enter. The other side is going to go to the accumulated depreciation, and that's going to be the last green asset account on the trial balance, which of course means it's going to be the last account over here in the general ledger. So I'm in X16. If you want to see it all together, you can hold down Control and scroll down, and that'll make it a little bit smaller so you can kind of see the whole screen if that's useful. We're in X16 way over here. I'm going to say equals, and I'm going to point to the credit. And when I hit enter, it's going to make that 50 go up to 100, like so. That 100 also represented here. Going to hold down Control, scroll back up, back to 100% over there. And now we've got this 100 represented here. And we've got the factory overhead went up by and to that 50,000. All right, let's see. Take a look at the next item. The next item is going to be factory utilities on account. So this is going to be the same type of principle. And remember, again, we probably learned factory utilities as we're going to debit utilities expense. Anytime we say utilities, we probably think utilities expense, debit. But in this case, that's the general rule, but that's because we usually use utility expense in order to help us generate revenue, matching principle. In this case, we're using utilities in the factory to help us generate asset up here, inventory. Therefore, and we don't know where exactly the process to put it to, so we're going to do the same thing. We're going to put a debit to instead of the expense of utilities. We're going to put it into the asset of inventory, more specifically, factory overhead. And again, I'm putting the factory overhead up in the asset account because it's going to be an asset event once we allocated it out. So I'm going to copy that. I'm going to put that on top, paste it 1, 2, 3. That's going to be for the 28,000. In this case, we're going to credit something for 28,000 as well. That credit is going to go to, now usually when we pay the utility bill, we pay with cash, but we're going to put it into the payable in this case because it said on account. So we're not going to hit cash. We're going to put it into the payable on account. So I'm going to copy accounts payable, and that's going to be the credit. Pasting it 1, 2, 3. Posting this out, if we scroll down 1, 2, 3, 4, 5, 6 is the sixth account down. Factory overhead. So we're going to scroll over here, find factory overhead, which is right there. It's in S28. So here's S28. We're going to say that that equals this 28,000. It's going to go up in that direction. And then we got the accounts payable, first orange account over here. So if we're looking for accounts payable, there it is. Once again, I'm going to hit scroll. I'm in X23. Scroll and down, or control and scroll down, and that will make the screen smaller. So we can see that at the same time. So I'm in X23 equals, we're going to point to that 28,000, making the payable go up because we owe more money. I'm going to scroll back over here to the trial balance, and within the trial balance, let's go back down to 100, we can see our items within the trial balance here. Next item says we got the direct materials used to 14,500. So this is what we're going to use in the production of course, our inventory. That's what we're using it in order to do. So what's happened is we got the raw materials here. We've got the raw materials, and now we're putting them to use. So you can visualize the raw materials like a pile of wood in the corner. We're putting that to use in the production process, being the work in process at this time. So we're going to take it out of raw materials, and we're just going to move it down here. So it's going to go into work in process, the inventory in process. That has a debit. We're going to make it do the same thing by making it go up with another debit. So I'm going to copy the work in process, paste it 1, 2, 3. It's going to go up by the 214.5, and then we're going to credit something. I'm going to put negative of the 214.5, and we're going to credit the raw material. Raw material being an asset, it's going down out of raw materials into the work in process. Copying this account, putting it underneath, right-clicking, pasting 1, 2, and 3.